My name is Max Gagliardi, and you're listening to the Talk Energy podcast. If you're watching this video, take a moment, hit the subscribe button on YouTube, or you can follow me on your favorite podcast app, leave a review on Apple. That would help me out. This episode is sponsored by Blockware Solutions. If you're interested in mining Bitcoin, Blockware Solutions has experience going back to 2013. They offer a variety of Bitcoin mining solutions, including selling new and used ASIC computers. They've sold over 250,000 ASICs, have mined over 1,000 Bitcoin in the Blockware pool, and have hosted over 200 megawatts for their hosting clients. If you're interested in learning more, you can visit blockwaresolutions.com/energy, and that would help the channel. That's blockwaresolutions.com/energy. This episode's guest is Joshua Pollard, aka Oil Mutt. Josh is the founder of Oil Mutt, where he helps source and evaluate oil and gas investments in conventional plays and participates in wells. Josh also has an experimental project where he's taking algae to make sustainable biofuels, and it's really fascinating. We talk about it in this episode. This episode, we discuss what Josh uses to evaluate oil and gas deals. He talks about the history of his time in this space and all the different things to look out for, including the many scammers that are out there and what to avoid. We also discuss Josh's sobriety, which he's been vocal about on social media, and the struggles that he's had to go through, and how he speaks out to maybe help some others that are facing the same things that he's had to go through. Lastly, we discuss his many side hustles and the ups and downs of being an entrepreneur in oil and gas. Hope you enjoy the show. Josh, welcome to Talk Energy. Thanks for doing it.
Thanks for having me, man.
Yeah, I just want to start out with the Oil Mutt and some of the background for people that don't know you on Twitter, for people that do know you on Twitter, like myself, but that don't know the story. What was the origin of the Oil Mutt, and then tell us about your background and what you do.
Well, Oil Mutt was kind of a catchy ringtone, I guess you could say. I was watching, Fast and Loud, Grease Monkey. It's like, I need a catchy name like that. And then I came up with Oil Mutt. Because I had a channel, but I wanted something to stand out, and Oil Mutt kind of did it for me. So that's how Oil Mutt started recently, but I've been into oil and gas over probably a decade now. So I've done everything, just about.
What before we get into your oil and gas background, I remember when I didn't get on Twitter, really, oil and gas Twitter, until like January of 2021, so a little over a year ago. And you were one of the early accounts that I followed. And if I call it oil and gas Twitter, people call it energy Twitter, EFT, or whatever, energy FinTwit, or, what's the other one? OOTT, oil options trading, whatever. I call it oil and gas Twitter because that's what I think of it as. Back then I feel like you were like uploading videos and stuff. You had more like, I haven't seen as much of that. You're doing some of it now, but I feel like back when I first got on, you were doing a lot of content, uploading videos, doing different things. But when did you start with the content and the Twitter stuff?
I've actually been doing it a while. If you look at my Joshua Pollard YouTube account, there's a lot of older stuff. And then what will happen is I take on a massive workload, and a lot of it is confidential. So I kind of have to stop showing what I'm doing. And it's about to change because I've noticed that and have people asking like, hey, where's the videos? It's like, well, I'm working on something else. So I'm going to start doing in-house oil and gas deals. I'm diving headfirst into minerals as well. But been working on some confidential kind of stuff work-wise, and it cuts into what I can and can't show. I'd love to make daily vlogs of what I'm doing to show people, but it's a confidential business, I guess you could say.
Yeah, no, I feel you. I hear that 100%. It's like, how much can you really, it's like I've been able to do some of it with, like, for example, when I do the Bitcoin stuff, I can go out and take some videos because we own that asset. But like when it comes to just like my traditional Ancova energy business and our clients, I mean, everything is highly confidential, and a lot of it's office work for me. So it's not like I really could be doing much field stuff anyways. But even if I wanted to like talk about the stuff we're doing in the office, it's like, it'd be very difficult to like make content around that because it's confidential. But, can talk about oil markets and gas markets and things like that. Why don't you tell us just about your background in the oil and gas space? You said you've done everything. Like, let's hear it. Let's hear the different things you've done, and how'd you start and how'd you get to where you are now?
Well, I started, it's funny, I actually started in oil and gas. I was working at a company in Houston who we made factories. and it was my life's passion, factory making, because it's hard as hell. Everything is from scratch. You start drawing on a piece of paper, and then you take it to CAD, then you manufacture it. And the housing market crashed. And before that, I was a production manager over 2,000 houses a year in North Texas that we were framing. So I was doing well and just blowing and going. And then, on a Wednesday, every contract that we had from a major factory building just were canceled overnight. The doors closed on a Wednesday. My son was born that Friday. So that became the dilemma where I started
Explain factory building for people.
Factory building, our main deal was smelter plants. If you've ever watched How It's Made, like they show how the part's made, we make the factory that makes the part. And making the factory is probably 150 times harder than making a prototype or a part. So if you like rabbit holes like me, if you like being a nerd like me, it's awesome. Like you get your ass kicked every day. And I started there as a shipping clerk because I wanted to work there. It's like, how the hell do I? It's like, okay, well, we'll work the mail room. And, you work your way up, and then one day it's all gone. So did a bunch of jobs. I drove over the road for Snyder for a couple months. I was up in New York, all kinds of stuff. I did a little bit of everything, and then I started selling cars. And I hated selling cars because the hours are long. If you don't get a sale, you just wasted an entire day, and you make like nothing. I did well. But then I sold a hard-loaded truck to a guy. It was like a $70,000 Dodge. It's like, what do you do, man? Like, that's what I want to do. Like, I need money. I'm poor. And he was in oil and gas sales, and he was a securities broker. And he said, yeah, just find a company and go sell, security deals, basically. And that's how I did. So I just went and finally found a place and started working there. And then I very quickly kind of fell in love with the research and the geology and the engineering and the deal side of it. So it just kind of morphed from there. And, I started working in courthouses, learning leases. I go out in the oil field, pull wells. Like I do a little bit of everything. And it's kind of morphed into what it is today is I make money on research, but I love being in the field. So,
well, explain that first job to me, like more in detail. Cause you I sort of get what you were doing, but like some people may not. Cause I got
it's like the energy funders type deal where you're selling to investors, overrides, working interests, stuff like that.
Kind of like a landman function, similar to like what a landman would do, right?
It's like a stockbroker, but you're selling deals. And unfortunately, 90% of that business is crooks. So you have to be very careful buying. But I was really good at it. I had a lot of problems with sobriety back then. I drank a lot. I've been sober going on 3 years now. Making that kind, I appreciate it. Yeah, making that kind of money was kind of bad for me. So it was one of those deals where I think subconsciously it's like, I can't do this because I'm making entirely too much money. And that sounds crazy, but I literally would make, $5 or $6 grand on a Friday, and I'd be borrowing money Monday morning for gas. Like it was just partying all weekend. And it was a very rough time for me. My son and his mother went back to Houston, left me. Like it was a rough time, but that's kind of the geology, the engineering, all that kind of saved me, so to speak. And I found something that actually just makes sense to me and just ran with it.
Let me ask you about what you said about 90% of people. First of all, I want to say just congrats on the no drinking thing. I think that it's really commendable. It's hard to do. I mean, I casually like to drink, and sometimes I know from a health standpoint, it's not good. And I think that the fact that you've been able to kick a bad habit and then also be public about it and own that. I think that shows a lot of character. It's not easy,
Yeah.
right? And
Well, if you can help somebody, I think it's important. You know,
exactly.
It's a lot of there's so much to it about drinking, and it starts out fun, and the next thing you know, it's not fun, and then the next thing you know, you're patting yourself on the back because you're like, hey, I only had 4 drinks last night. I did good. When you've got a clear problem, and part of the 12-step program that I'm in, AA, everybody knows it. It's helping others, being thankful that you sobered up, and helping others. So it's with Corona, they shut down, but I'm about to start going to the county jails again for AA meetings with inmates, and I mean all kinds of stuff. So it's rewarding to me to try to help others see that, hey, you can make it out.
Yeah, man. So no, it's really good, really commendable. I want you to talk a little bit about. You said 90% of that business can be fraud, or like there's a lot of bad actors. And I heard from my dad. Had my dad on the podcast, and he's a geologist. And early in his career, he had a bad experience where he was working down in Houston. Then he got a job up in Oklahoma, and it was the first job he had up here. So some company that was out kind of, I think they were not on the up and up. He didn't know. He was young. He was like 20 something years old, 21, 22, gets hired on as like a geologist, and he's helping, promote deals. And he went out to like one of their deals that there was a well they're supposed to be drilling, and it just had pipe sticking up out of the ground, just sitting there, like just nothing there. Right. And he said he was like with an investor, and he was just like really embarrassed and like didn't understand what was going on. He's like, I don't get what's going on here. The founder ended up dying in like a plane crash, like really mysteriously, and like all this shady stuff happened. And he was only there for a few months, but it was just like a story that he had early in his career. He's like, yeah, I had no clue that this stuff was going on. So maybe talk about some of that and just the shadiness and the things people need to watch out for.
Well, I do consulting a lot on drilling prospects, production deals. I mean, research is my bread and butter, the due diligence side. Unfortunately, a lot of guys have figured out through a private placement memorandum, they can monetize dry holes. So they'll mark a deal up 4 or 5 times what it actually costs. They'll hit a dry hole and they'll be like, oh, sorry. But meanwhile, they made $500,000 $1 million on that dry hole from investors. And that's just, 90% of the deals I see out there are like that. And you find some good deals, don't get me wrong. I saw a deal just the other day. It's really good looking. But then you've got 9 out of 10 that are just, you're crook, So
to translate that for somebody else, to translate that for somebody, basically they go out and they sell a prospect that says, I'm going to drill this well. They've baked in a promote effectively into the cost there to where they're going to make, money on the drilling of the well above and beyond their actual cost. And that's where they make their money. And then whether or not the well is successful or not, it doesn't matter. And in some instances, maybe they didn't even know from the beginning it's not going to be a success. And they just take the spread they're making on effectively the cost that they're promoting out to these investors that then were
exactly. And it's a double whammy because like on your K-1s for tax purposes, for example, you write off what your actual costs are. You don't write off what you gave the guy for the K-1s and the tax purposes. You write off the drilling mud, all that stuff. Well, so you lose $100,000 and then you find out you only get a $50,000 tax write-off for it too. So it's a double whammy. But my main thing is when a guy sells 100% of a well, he has zero interest in making a good well, for one. And two, a lot of them, production is completely different from drilling. Like I see it a lot. Guys are very good at one thing, and they're like, oh, I'm going to go have some oil wells that produce. And then they just get their butts handed to them because it's a completely different animal. And there's a sizable learning curve. So that's another aspect is if you do hit a well, can they even manage it? So there's a lot to it. But yeah, basically they make a $500,000 and you lost your ass kind of deal. And it's very common. So.
And how do you prove that there was something illegal done, right? Like, can you prove that? Like if somebody took the risk and they knew that it was a dry hole, have you seen people get gone at, people come after these people that have done this before? And I wasn't planning on talking about this topic, but it's interesting. I think it's fun to talk.
Yeah, well,
it's interesting to talk about.
I actually do it a lot, actually, is kind of just do autopsy on deals. And there's a lot of things that go into it. A key thing is, hold on, dog. My mom's staying with me right now, so I've got a little Yorkie. A key thing is, if it's a joint venture, the money has to be used for that well. So if the promoter is writing themselves $50,000 checks personally, depending on the state and the securities, you can go after them that way. And I'm not a lawyer. I'm not an accountant. Check with lawyers and stuff, but I look at the deals all the time. But there's a lot of different things you can do. And then there's also factors of they used casing or used pump jacks or some of that stuff, which I do that all the time for production, but I'm not charging somebody tenfold what it actually costs either. So there's a lot to it in the securities. I'll say that much.
Yeah. Okay. Well, that's interesting. I mean, I think that you heard a lot about it in you hear stories from the 80s and stuff in the 90s. Mm-hmm. Clearly it's still going on today. What is whenever you go to look at a prospect, what are you trying to identify? You said you like to nerd out on things. I do too. You talked about geology, engineering, et cetera. But if you had to go through a bullet point list or a checklist of when you probably see a lot of things. What are the things that when you see them, it starts to get interesting to you and you say, hey, maybe there's something here. Just kind of walk me through your methodology and process.
I love high side. If I want to hit singles, I'll go buy oil wells that are already producing. If I'm going to take the risk and drill, I want the high side just to be, you can't even quantify it. It's so high. So that's one. I like seismic. I like seismic deals because typically there's more engineering and geology involved. And I think most importantly, I like an AFE, authorization for expenditure. That way you see what it's actually costing. And a lot of the promoted deals don't have AFEs because they jack the price up. Or they front load it and charge you $300,000 for geology. So high side, AFEs, and solid geology are important to me. When we went out, lost my ass in Arizona chasing helium. It was risky as hell. It was wildcatting, but on the flip side, a company just to our west, they hit $150 million a year well. So that's my kind of stuff. I'm going to go bag an elephant if I'm drilling. So.
Yeah, you're willing to take on the risk, the exploration risk, and the execution risk if there's an upside that makes it worth it. If you're just trying to get some low return and still having to take on that risk, then it's just what am I doing here? I'll just go buy reserves that are flowing. And you talked about seismic. I clearly know what it is. Maybe some people don't, but talk about the science side, what you look for, people that have spent the money on the geology, the seismic, and the logs and things like that for people that don't know.
Typically, it's a lot bigger than just a short conversation. But during the 50s, say, there was massive shutdowns by the Railroad Commission. You could only produce 8 days a month in some cases. So you have legacy seismic plays back in those days that were basically shut down. So I like forgotten fields. Another great time period is 1929, 1930, right before the East Texas field came on. Stuff was just left for dead. So I like big opportunities that have just been left to history and oil and gas amnesia. So when you can find those type of deals where new seismic, new technology has come through and really seen the field, I think that's big. We hear every day that we need to find new oil fields, and I completely disagree. We found trillions of barrels of oil around the world. We just have to go back and figure out how to get more out. the Austin Chalk alone, I think we've gotten maybe 20% of the oil in the ground. So the technology as it comes along will keep, every time they say peak oil and then the technology breakthrough hits. And this has been going back since the 1860s. Rockefeller used to laugh at guys when they'd say peak oil because he knew this is not just a Pennsylvania deal. Spindletop, they knew there was oil and gas there in the late 1800s, but they couldn't get past a quicksand and a caving shell. And then finally some old boys from Corsicana came down and figured out how to get past that zone, and then the rest is history. But I think we know where oil is. It's just a matter of getting it. So when I look at a deal, I like there to be a historical kind of background of why it was left. So I hope that makes sense, but it's like there's a reason it was left behind, whether it be prices crashed or whatever the case may be, but there's very much high side there. And then you also have a massive amount of science behind it, which further, it's always risky. You drill, but there's a lot there that says, hey, we're going to go out and make a well.
Well, pricing and fluctuations, I'll talk to you about the cycles here in a little bit. I've got that on my list of questions. But one of the things is, like you mentioned, prices go down, projects are abandoned, old fields for whatever reason may still be producing, but maybe there's inventory left there, there's upside there, and people kind of move away from it for whatever reason, probably because all the ups and downs in the cycles, people, things get lost, companies change hands, things happen. What do you think is most of what you're looking at conventional stuff, or are you doing horizontal too?
Yeah. No, I don't mess with the horizontal right now because it's, everybody I've talked to said they're going to go back in and just refract these wells again. So I think personally, it's just not worth the time. And if you can refract a well, like if Continental next door refracts a well and it comes on really good, well, you sitting there, you're like, well, it may only be making 100 barrels a day right now, but I know we can refract it. So your cost or your value on it is too high. So conventional is where I'm at for now. I think when it gets down to stripper levels, marginal levels, I think technology again is going to need to break through for the horizontal wells. But I've seen wells in the Luling field that are 100 years old get a sand frac and they come back on at 10 barrels a day. So there's so much oil left in these reserves. It's just a question of how do you get them out. And right. I think horizontal will have 2 to 3 more cycles of refracts if I had to guess. So
it's interesting because I know a lot of smart guys that have been started their careers in the horizontal side because that's where they hit the cycle in terms of how old they are. They're like, 15 years in the business, and whenever horizontal was taking off, that's kind of where they cut their teeth and they learned a lot. And then some of these guys, now that they're more entrepreneurial, they're focusing almost exclusively on vertical, which is what we're referring to as conventional, which is what people would think of as just an old school well. You just drill relatively straight down.
Yeah.
And the interesting thing is, like what you mentioned around, stimulation technology, the different types of things that we've learned on how to frack a well and how to stimulate a well for, again, most people probably know, but this is a way to effectively stimulate the rock, to break open the rock formations and to extract the hydrocarbons. And we've seen a lot of innovation in that space, but primarily focused on horizontal drilling. But I've always kind of intuitively thought that some of these new technologies around what we've learned through these completion technologies over the years could be reapplied to conventional vertical production.
Yeah.
And it sounds like maybe that's kind of what you're talking about. It's like, hey, why don't we take 100%, what we've learned?
Yeah.
Go ahead. Yeah, talk on that.
Colin Frackslap, Digital Wildcatters, they had a great thread, and this has been like a year, but they were talking about running liners. And the liners, which is almost like a casing that goes down in the well, I think that's going to play a big factor in, because a lot of these older wells, they start eroding, and a lot of times they just plug the wells. But now if you have a legit cost-effective way to make almost a new well bore, I think that's going to be big. I think microbes, I'm working, well, talk too much about the bat cave, but I'm working on microbes and separating out paraffin-eating microbes. It's a lot of fun, and a lot of these wells that were shut in, I was talking about, like in the 50s, for example, you destroy like this. They call it the skin, the scale, because crap builds up around the well bore and basically cuts off the oil. So you have literally whole fields around the country that were shut in before the OPEC embargo shut down. And, I think it's going to be wide open for the taking. And on a cost scenario, it's a lot cheaper, but then on top of it, it's a lot, you can set your clock to it on a lot of this production. He goes by his real name. Sam up in Colorado. I had to stop there for
Don't want to dox on.
Yeah. It's like he goes by his real name, so we're good. He had wells up in Colorado that were like a 2% decline curve. So when you have production like that, and then you look at horizontal where it's just drop, and then it finally flatlines. Well, conventional, you already have the flat line. So you can really do a lot to it. And that comes into play like lightning hits a pump jack. It's like, shit, do I spend 50 grand on a new pump jack? Well, if you've got solid production, it's like, okay, yeah, I can pay for this pump jack. Like, it'll financially work. If you have a big problem on a horizontal shale well and it's 10 barrels a day, you're going to have a lot of questions about financial ability to bring it back online, because you got to remember too, those shale wells make a lot of water, so you've got a water problem too. So I think conventional is a lost art, but I think it's about to get popular again, because it's the cheaper, more predictable way about it. And then of course you got the RAWs, residual oil zone, the San Andreas. I think that single-handedly probably could flood the market for the next 20 years. So that's another conventional play that you got to, well, I call it conventional. It's kind of a secondary recovery, but that's another one that's coming. And I've been looking mineral right deals out there for the RAWs, but that's another one.
No, it's interesting. I mean, I think with prices coming back to where they are now, a lot of things are going to work that didn't used to work. And what about like just from that perspective, do you ever, I mean, I guess like, is it just, I said a lot of what you're doing is confidential, but I mean, in terms of what you do, if you personally take an interest in these projects or if you're just brokering them, but how do you think about like risk mitigation on the price side? Do you ever hedge anything, or are you always just exposed if you do have direct exposure, or do you even have direct exposure to investments in these projects?
I just do the age-old model. I look for the turd in Beverly Hills. Like, you get familiar with an area, and you can then look and say, okay, well, he's in the Tannehill. He should be doing this. And then you look at his chemical. It's like, oh, he's getting ripped off on chemical. And, you get familiar with an area, and then you can see where somebody just doesn't know what they're doing, or they've got an issue of embezzlement, which you'll see on lease operating statements, or overcharging, and you look for diamonds in a big old pile of coal. I don't know if we can cuss on here. I almost said the other one, but
cuss whatever you want.
Yeah. But I mean, it's just you look for deals, but in prices like now, it's just you can't. Sometimes you just got to say nope, can't do it, because you're exposed. Your hedge is not doing a deal that you can't make money at $60. Like, if you can't make money at $60 on a deal, you're in trouble in conventional. High water, deep well. I don't like deep wells. I don't like high water volumes. I don't like H2S. Like, I have a very regimented thing I look for, and if it's not available, I go buy minerals, or I play with algae. I mean, I'd rather pass on a deal than go broke on a deal. I've gone broke. I went broke on helium. It's not fun. Like, it ain't fun. So I'll pass on a deal before I go broke on a deal again. So
let me ask you this about the helium project specifically, because I've got a background in midstream. Typically, though, I'm working with upstream guys. So, like back when I was at Chesapeake, back in the day, I was kind of like the liaison between the upstream and the midstream in the markets. So I've always kind of like, people think of me, they'll be like, oh, you're a midstream guy. I'm like, yeah, kind of, but I always work for producers. So it's like, I'm not really, we did have a midstream company for about 3 years and we exited out of that. But currently I don't own any midstream. Well, I tell you that we do own an interest in one field that has a little pipeline system. But for the most part, I'm not like I'm not on that side of the fence. I'm on the producer side of the fence, working with producers to help them get the best deals. One thing that's been a challenge for helium, maybe I tweeted you about this or somebody, but
I think we did talk about it.
Yeah, the problem that I've always seen, like in Kansas, for example, you see a lot of helium, and then you look at the midstream contract, and they're keeping a lot of times a huge chunk of that value. And there's really not a lot of helium plants out there that can process helium and that can sell it for a good price. The market's also super opaque. You know, I remember we looked at a helium deal. We looked at a helium deal to buy like a helium plant, and it was like, well, we're getting $150 in MCF, but we could be getting 300 in a year from now. We could be getting 50 because they just, they had like a purchase agreement and they don't know what the world markets are doing. Actually, with this Russia thing, I've heard kind of anecdotally that helium is going through the roof right now. It's gone way up in pricing.
The Amur project was supposed to be the godsend to helium. The Amur project in Russia was supposed to just fill China full of helium and take off some of that demand. And now who knows what's going to happen. I specifically chose Arizona because of the gas makeup. It's nitrogen
composition, the gas composition.
Yeah. Yep. It's up to 14% helium concentrations.
Wow.
It's mainly nitrogen. So you have nitrogen, oxygen, helium, and that's a little bit of argon, and that's it. So a simple PSA system, and you've got 5-grade helium at site, and we had contracts basically ready to go for 1,000 per MCF, and all we had to do is get it to the West Coast. So that was kind of the short play for Arizona, why I liked it so much. When you look at,
so was there a plant there? Was there a plant there? You had to like liquefy it and then truck it to the West Coast, or what? How were you going to? What was the logistics behind?
It was pretty straightforward, actually. A fella, I don't think he's got the company anymore, but Ken Kelly has these mega helium gas tank trucks, like the tankers. So the plant is, you can buy a PSA, pressure swing absorption plant, and basically when you run the raw gas, and I think you know, but I'll explain it. When you run the raw gas through a pressure vessel, under pressure, you have zeolite and carbon pellets, and the nitrogen and oxygen cling to those pellets, allowing the helium just to pass right through. So the gas composition was very simple. And then from there, you compress it at about 4,000 PSI, stick it on a tanker, and then get it to the West Coast, and then they liquefy it there and then send it over. Because the key for, there's been big debates on how they want to transfer, like to Asia and stuff, because if you get caught up at a port, you're in trouble if it's liquefied, because it's going to start gasifying and you're going to start losing helium. If it's in a gas state, well, then it's not such a big deal. It can sit there longer. So they were debating, the multiple buyers, they were debating whether they wanted to keep it gas and send it over or liquefy it on the West Coast. But that wasn't our problem. We just had to get it there. And if we delivered, I wouldn't be talking to you probably right now. I'd be on a boat somewhere fishing probably. Because
if you haven't had a deal, if you haven't had a deal in oil and gas that fell apart, or a deal that could have made you a tremendous amount of wealth and it didn't, then you're not playing the game probably, because everybody's got a story. A lot of people have stories like that, right? If you're a deal guy that's chasing deals, You have those stories. My dad, again, I'll refer to him and his deal because he did some, a lot of exploratory stuff in his career. And he said one time he owned a big working interest in a well, and there was a huge offset well. And, he put this deal together and they drilled it, and he drove out. I think it was in Kansas. They drove out and he was sat there all night for 2 days, hardly didn't sleep, looking at the logs, trying to see gas shows, and it ended up just not being a good well. And he was like, man, had this well hit, he's like, had this well hit at that time, I guess where pricing was at, he's like, it would have changed my life. He's like, I remember sitting there for 2 days, I didn't sleep, watching the logs, and then driving back, just feeling defeated. And I've been there on our side. We raised money to go pursue private equity, large scale transactions, couple $100 million deals, and had a few things that were just right on the precipice. And then for whatever reason, didn't get, various things didn't happen. The deal fell through, and it's just a gut wrenching, and it's an emotional roller coaster doing the deal stuff. I mean, maybe talk about that a little bit. How do you handle the ups and the downs of that type of work?
Well, I used to drink my way through it. Now I've kind of learned how to just say it happened. It is what it is. And just keep going. I don't get my hopes up on anything. I take I never turn down a meeting. If there's an offer for a meeting, I'm going to take it, because I've learned it's like there's times where it's like, there's no point in talking to that guy. It's a waste of time. And then come to find out, it's like, shit, if I had done that, I would have made a killing. So now I take every meeting within reason. Like if somebody wants to, hey, I got an idea, blah, blah, blah. It's like, cool, I'll come talk to you. Always take the meetings. And then you're just kind of filling your funnel full of deals. And then from there, you just constantly stack stuff. Now, over the last 5 months, I really haven't done much. I've been under contract on a sizable fiasco. So I haven't been able to do a lot, but typically I've got too many ideas, not enough money, not enough time. But I enjoy doing that. And then, it's interesting. But you just kind of run with it.
I was going to say around taking all the meetings, I've always had that philosophy too, is that what I knew intuitively is that the opportunities that I came across in my career, and I've been, since I was 27, I haven't really had we did raise a little private equity money in there for a minute. I had a W-2. It was nice to get a salary for a while, but for the most part, the majority of my income the majority of my career has been kind of eat what you kill. And that's a tough way to live. You can have a lot more upside with that, but you can also have a lot more uncertainty with it. And I'll get to that in a second. So that's my next point. But circling back to what you said about taking all the meetings, what I knew intuitively was just that when the opportunities came in life, it was either through, number one, relationships that I had, or number two, it was through creating new relationships. So it was either existing people I knew, or was having those conversations, taking those meetings. And I think that in COVID, I had a crisis around how can I connect with people? How can I talk with people? I spent the first month of COVID calling everybody in my phone, checking in, right? Hey, what's going on? And how are things going? And I'm always trying to drum up new things to do. And then, you call everybody once and everybody's sitting at their house with, locked in, or relatively, and people were still out doing things, but it was things had kind of shut down. Prices were terrible. And I had this sort of crisis of how do I connect with people? And that was my big launch into doing, my brother was like, you should do a podcast. You should start using social media. And now I've gotten to the point where I am actually struggling to sift through the amount of meeting, you know what I'm saying? Because I've been getting so many requests. It used to be I could take every meeting, and every person that hit me up, I'd be like, all right, let's talk. But lately with social media and Twitter, and then the Bitcoin stuff, and then everything I've got going on, real estate, etc., we just get inundated with so many requests. While I was just on here, someone called my cell and then sent me a message on LinkedIn and was like, hey, I just tried your cell. And it's someone I know relative. I don't know him that well. I know him from online, but I'll probably call him back and take it. But I got to a point to where I had to just start filtering it a little bit, because the power of the media stuff, you just have people reaching out like crazy. Yeah. So how do you prioritize? You still take every single one, or?
Well, I hired a killer for one. Allie, she's on Twitter, I think now. She's amazing, and she's kind of taken over a lot of research for me. She's been working for me now for about 6 months. Um, just very, very naturally good at research. So she's taken a sizable load off and given me more time to go out and make money, because
That's good.
Um,
Got to
you're
delegate.
constantly self-employed. You're constantly making sure you have money coming to make payroll and everything else. So that's a big thing. But social media definitely has been big. I made a shit ton of money in 2020 consulting buy side, going out into the field and looking at wells for people.
Awesome.
If you're looking at doing like a $300,000 deal with your buddies, and you're ready to pull the trigger on it, and you're like, okay, hold on 1 second. You call me up, you pay me, and I go check it. I'm like, no, you don't want to buy it because of this, or shit, this looks like a good deal. But I kept having to raise my day rates because I didn't have enough hours in the day consulting buy side. Um, Oil wells were just being given away for free, like 3 and 4 barrels a day. And now those same deals are $100,000, So, and that's one of those highs and lows we were talking about. It's like, damn, I should have got more wells. But as it stands right now, it's just, you're constantly evolving. And as much as I love stripper wells, I can monetize my time in a better way. So, it constantly changes. But more time, for one, I'm not on a bar stool anymore. That's always helpful. But I'd say hiring really good, talented people has been a huge help to me, where I can just forward an email and say, handle it. And then she can handle it.
Yep. That's huge.
Yeah. And I mean, our current contract ends July 1st. So we're on a sizable contract for a company right now. That ends July 1st. And then, I think she's ready to basically open her own book of business and start taking on clients in July. And I'm excited for her. So she's definitely earned it. She works for me, which is not easy. I have to overpay employees because I fire them twice a week, so.
Yeah. Well, I was going to say, like, the employee thing is key, and having good people around you. And I've always said that I don't ever like the idea of being a CEO or an executive. I like the idea of being a partner, which means you have other people that are your either mutuals or as close to mutuals that can be in terms of the splits and what you're trying to share in the upside and the downside. And I found that good partners are hard to come by, and you should cherish them when you find them, and they can have a lot of leverage. And then good employees are the same way. They're hard to come by. You got to pay them. You want them to be happy. You got to manage it. And if you're ever going to grow a business or expand your bandwidth personally, you have to be able to do that. I think the hardest thing for me, and I deal with it to this day, is the uncertainty of the future with like a lot of what our business is. You mentioned a contract rolling off. I mean, we get that all the time. You get like the best client, we've ever had. We get a group, I'll just give like a random example. You get a guy, you spend 3 months trying to do BD, business development, knocking on doors, you're talking to people, something falls in your lap. You get a guy call you up. It's one of your buddies. Hey man, we just bought this big package. Will you guys come in and help us, market the gas, sell the gas, or come do consulting or whatever it may be that they want? And you're like, oh man, hell yeah. And you get maybe like a 1-year deal. I mean, the longest deals we've ever done on buying gas is typically a year to, maybe a 5-year deal. We had a couple of those, and they weren't big deals. Usually if it's a smaller amount, you can maybe get a longer term. But then you get this great client and it's awesome. And you start the year and you're trying to budget and figure out, how much money we're going to make this year, how much we got to pay our employees, and how we're going to run a company. And that great client all of a sudden calls you up, hey man, we just got merged with this other company and they're firing everybody here. And I don't know if your guys' contract is going to stay around, stuff like that. Or, hey, we just sold, or we're going to sell. By the way, we're running a process to sell our asset or something like that. And you're like thinking, oh my God, like if this goes away, that's a big book of business. And so
and you turn down business for them.
Right. You carved out bandwidth,
you turn down business to keep them. And then it's like, it's, that's like one of those things. I love the freedom being your own boss, but it definitely comes with some anxiety. I take asshole pills, as they're referred to, because it's just you're constantly under the gun. And I tell Allie every day, it's like our paychecks ain't guaranteed next month. It all depends on what we do today. And she's, amazing, and she's a dog, and she just constantly is working and understands that, hey, we're a business. We're not communists. This ain't Greenpeace. We make money. And if we're not doing our jobs at a high level, we're not going to make money no more. And it's off to Whataburger or wherever.
Yeah, right.
But, that's
you just got to take it.
Definitely hard.
Take it day by day. And I mean, I've gotten into like what they call Stoicism, which is kind of like a sort of a philosophy. And it's sort of like the Greeks got really into it, and like Marcus Aurelius was a big Stoic, and he wrote a lot of writings that's really cool that are here to this day. And I've just been really enjoying it because it's kind of like this philosophy around focusing on what you can control and really just kind of ruthlessly ignoring the things in your life that you have no control over, and not letting those take up your energy or your mental space. And if you can stay in that mode where you're like, well, that sucks that happened, but I can't control it. What I can control today is who do I pick up the phone and talk to? Who do I call? What do I do this morning, this afternoon? What can I get done? And if you just like live your life like that, what you find out is that 6 months will take care of itself. 6 years will take care of itself. Just do what you got to do right now and focus on that.
That's a big part of sobriety, like AA. My first meeting, my mom drugged me to an AA meeting. I've been putting off these damn things for like a year. Right. And it's like you go to AA, it's religious and all this stuff. It's like, man, I don't know. Like, you don't want to be there. Like, anybody who talks shit about AA probably has an alcohol problem, first of all. I had a big one. But, a guy that first night told me about Russell Brand's book, Recovery, and he breaks down all the steps in common sense. And that's understanding you can't do everything is a major part of sobriety. It's a major part of peace of mind. Is like you can't control everything, and more importantly, you can't hold on to things that happened to you in second grade, or like a girl beat my ass in second grade. All my friends made fun of me. Like, that actually happened in the trailer park, but like I held on to that forever. It's like, man, guys are giving me shit for so long about getting beat up by a girl, and then you think about it, you just laugh about it. It's like, I can't believe that bugged me like it did for so long. But all these things go back to you trying to control what you can't control. So it's a great philosophy to live by. I try it. It's easier said than done, but it's a daily task.
It is easier said than done. I think I do think they use a lot of the principles from Stoicism in AA. I've posted a couple of tweets where I've been reading these books. Ryan Holiday I really like. He's a really good author and a guy that he cranks out books all the time, and he's got one called the Stillness is the Key, and that one's kind of like mindfulness plus Stoicism. Another one's called like the Obstacle is the Way, and the whole book is just talking about how the challenges are actually what make you better, and that's shouldn't fear those things. You should attack them. But like I'll post quotes from some of those books, and people are like, I didn't know I was attending an AA meeting on my Twitter thing, and I'm like, well, it's probably I think it is some of the same stuff they use in AA, but it helps you in business as well. I think that mindset. So switching gears a little bit to talk about, I see you out on the lease roads. You got the lease hog, which I think is really fun. Your car, I can't remember what it is. What is
it? It's a Hyundai.
Hyundai, that's right.
It's a Hyundai Sonata, and Hyundai changed the motor at 160,000 miles for free.
Nice.
So it's insane, and it everybody makes fun of it, but in 2020, I saved over $20,000 by using it.
Yeah.
Instead of a truck. Got rid of my truck and did it, and now I'm saving even more.
Right, because of gas. Yeah.
Yeah.
I was going to say too. So when you go out on lease, what do you look for when you show up on a site? How do you think about things like safety? Do you think about things like you see people out there on leases making content? They're sticking their cell phone down in a tank battery, and I'm kind of wincing, like, hope there's no spark or discharge or something where that.
Yeah, it's not intrinsically safe necessarily to stick your cell phone. Me and buddies have laughed about that. Like, this is the dumbest thing we've ever done, like filming on a tank battery, because you have all these fumes coming out of the tank from the
Yeah.
oil. And it's like, this is a dumb idea. But
Right.
there's a million different things on a lease that can kill you. Like we're pulling wells, like pulling pipe out of the ground to fix a pump. And out of nowhere, on this pole rig, the swivel just breaks free and smacks a guy right in the head, which he had a carbon fiber hard hat on. He lived, went to the hospital, got scans, everything's fine. But and he was a solid, safety oriented guy, but that's just how quick it happens.
Right.
So, safety is a very big thing. And another problem with the lease hog, my Hyundai, my car, ranchers and farmers see me pull up in a car and they're like, who the hell is this guy? Like, you show up in a truck, they don't think nothing about it. You show up in a car, they think you're a crackhead trying to steal something.
Right.
So I carry around a reflector vest and a hard hat specifically for that, especially if I'm on a new lease, like I'm inspecting a lease. And then you've got wildlife, packs of hogs. You've got donkeys are the meanest sons of bitches I've ever met. Like, them things are not, like, I watch Shrek and you think donkeys like friendly. They're not friendly at all. Like, they're assholes.
Yeah.
But,
What's that saying? If like I looked at, if you ever want livestock, they're like, if you want to keep it alive, have some donkeys. That'll help scare off
and that's
any
what they're
of the
there for. Yeah,
coyotes and everything else.
And yeah, they are. I've had them run across the field at me, and I just, you take off running, because you don't know if they're coming to say hello or coming to, take a piece of your ass. And
Right.
I don't want to find out.
Right. Interesting stories around the safety side. One time, I'm not out on site a lot. Lately, the last 3 months, I've had to go out a number of times to this Bitcoin mine that we've got going on, because I'm the only guy that knows how to work on the computer side of it. So I find myself on a lease, and that lease has tank batteries. It's got a compressor site there. So there's a large compressor. And then with the Bitcoin mine, and this is actually a different site. This wasn't our mine. This was another mine that we consulted for a group and brokered a deal. And I won't call them out, but they had some flow lines that were coming off the meter, and they just lay on top of the ground, and they're going to these generators, right? And then from the generator, it's taking the gas, and then it goes to these electrical lines, which are extremely high voltage, and then that goes into the panel, right? And then that goes into the mine. And we, this is the first time mine we ever did, and we were out there, and I shot a bunch of content, videoed a bunch of stuff, took some drone shots. It was fine. And one of the video shots that I did, I kind of walked along the line that was on the ground, just got some footage of the pipe. And then later that day, I got a call that the mine was down, and it was one of the joints on that pipe had ruptured and like basically exploded. And it was like they said it sounded like a bomb went off.
Yeah.
And shrapnel went everywhere. And all I could think about was how, man, I was literally standing right where that joint was. I stood there and had a conversation with somebody right next to it earlier that day. And
it's unsuspected. It's like, that swivel coming off and hitting that guy in the head. Like, it happened so quick. And, ideally you're pigging the gathering lines. You're actually checking the lines and everything. But, I look for signs of guys not taking care of their stuff, whether it be PVC pipe on the tank batteries. And
right.
You'll get people throwing a fit because they do it, but that doesn't last. In the sun, it just bakes, eats up.
Right.
And then, you look at like nipples, which are basically tubes, plumbing tubes for connecting pipes, but they'll start leaking from the threads, and it's going soon. Typically the threads will show you before something else does, but then you also have to factor in hard freezes, like the February freeze when it got down to 0. It definitely, if you had fluid in the lines, it stretched the lines out. It messed up a lot of stuff, so that's an issue. But there's a million different things that will kill you. And I'm a firm believer when I take over a lease, if it looks suspect, I change it. If the electrical box looks funny, I change it all because it's not worth somebody getting hurt. And then on top of it, when it goes, if nobody does get hurt, well, you still got to change it anyways. And you probably got to clean up. You probably made a spill. You probably did all this stuff. So I like surface stuff to look good, and I like leases that have good oil production, historical, just flat production. But you constantly worry about your guys, like, because they're always by themselves. Cell phone service can be an issue. I don't like that either. But you try to hire people who are scared shitless of their own shadow because they seem to do better. They always have their meter, like H2S meter. The guys that are skittish and scared to do shit normally are 10 times more safe than the guys that ain't scared of shit, because the guys that ain't scared of shit typically get hurt 10 times more often than the guys that are scared of everything. So it's like a little field hiring tip.
Yeah.
Complacency kills,
That's a good tip. No, it's good. Yeah, safety is critical. And I think people, especially smaller operations, I mean, obviously the big companies, they focus on it a ton. But at the smaller companies, maybe corners get cut or guys are more cavalier. Switching again topics here to the cycles of the up and down nature of the business. You mentioned in 2020 you did really well. How do you view the cycles? Is there always opportunity, or does the movement in commodity prices and the up and down nature of this impact what you do, or how do you navigate that?
Well, I'm constantly evolving, but I think there's always opportunities. Right now, I'm moving into minerals because I think there's an opportunity to. My model right now is buying 10% of the minerals, 1 to 10% of somebody's minerals, and then marketing their minerals and kind of being mineral management for them and working with operators to get wells refract or whatever the case may be. But, that's kind of when you break down the math, that's kind of the easy play right now, where I can add value to somebody's minerals and make money that way. And then on the flip side, when shit hits the fan, you have all this private money coming into the business buying, because everybody knows, hey, that's where the opportunity is. It's like, it's no different than, Warren Buffett loading up on Amazon and all the other crap right now that's down. It's the same concept. So once you become opportunistic, you just have to think through it. But high prices, low prices, there's always going to be opportunities. It's just being shit. You got to be cautious and not get carried away. It's kind of like the algae stuff I'm working on. The biofuel aspect is interesting right now at $100 oil, but if oil crashes, your biofuel is worthless. So, that's just one of those deals. Like, how much time do you want to put into something that's worthless at $50 oil?
Right.
And that's another aspect of it.
Yep. Yeah, it just seems like you got to be opportunistic and figure it out. I mean, there's always something, right? Like whenever in 2020, we did a number of deals where we helped with bankruptcies, where we had companies that were either trying to buy another entity out of bankruptcy, and they were like, hey, there's a bunch of terrible midstream contracts on here. Can you help us renegotiate these to make this asset worth something? Because right now it's not, because these contracts are dragging it down. So we did some of that. We did one large public company that we had some relationships with. They declared bankruptcy and had a bunch of firm commitments that they said, hey, will you guys come and help us consult renegotiating these? And so we had a nice little book of business come that year just from stuff we were unexpected, and it was bankruptcies, which you never relish in getting business off of somebody else's misfortune. Yeah. But it just showed that we had, the ability to make money in a way that we really hadn't thought of, which was doing that stuff. So there's always something there. And if you're entrepreneurial and if you're in the oil and gas industry, you just got to look at what's available now. Because what I found is that, like, the old model that worked great in the old playbook, 6 months from now, it may not work great anymore for whatever reason, right? The markets change. and you have to be able to be flexible and adaptable.
Constantly. And like Matt Toohey and them, they give me shit all the time because I'm constantly coming up with stupid ideas. And they're like, you're all over the map. It's like, oh, I kind of have to be.
Right.
I'm constantly like the algae. It's like, instantly I see uh, just blatant issue with biofuel sustainable in the price structure. So it's like I start looking around. It's like, oh shit, I can use this in cosmetics. So my algae now is going to be more of a cosmetics deal, and then we'll see what happens with biofuel. But the cosmetic side is $5,000 a gallon compared to biodiesel, which is $5,000. So
talk to me about the algae stuff if you can. Can you share about what you're doing there? Is that confidential, or is it something you can talk about? It sounds
no, I started about a month ago. I was bored, and it's like, hey, I want to make some diesel. So I ordered some algae, and it died very quickly. And I realized, okay, I've got to change it up. So I've just been playing with this algae, and I'm a space nerd. So I think algae is going to be very big in space travel and all that fun stuff because it brings so much to the table. But looking at the models of biofuels and the failures of the past, one interesting note I saw is that they didn't have carbon credits. Amazon and Apple and everybody, they weren't paying carbon credits. And an acre of algae can produce $200,000 to $300,000 a year of carbon credits alone. So it changes the narrative. And then, growing it, and I pretty well, like there's 5 stages of the algae. There's like the baby stage, and then you have just the teenage stage where it just flies off the charts and doubles over 24 hours. And then the next 3 stages, it slows down. So right now I'm creating an environment that kills off after stage 3. So it protects kind of the babies, and then I get it to double. And then I make with the bubblers and the nutrients and all that stuff, I'm trying to create an atmosphere where it's constantly growing, and then, grandpa's getting killed off very quickly. It probably sounds horrible, but I want rapid growth, rapid oil development. So that's what I'm working on right now. And then just, the cosmetic angle is highly intriguing to me because I made a gallon in a fish aquarium of this oil in a week. So, if you can even retail it for $500 a gallon in cosmetics, I call that a win. So
it's pretty cool. I like how you're just, like you said, you're coming up with different ideas. You never know what's going to hit. You never know what you're going to learn. Sometimes just learning in the process of chasing a new business deal. Maybe the deal didn't go through or didn't pan out how you wanted it to, but you come away a lot smarter. And hopefully the education didn't cost you too much. One thing I would say in terms of the models, that how it changes with me, like one thing, personal experience is like on the midstream side. I mean, 10 years ago, it was easy. I mean, there's all these new emerging plays. You could go and get a dedication, turn around and flip it for a big multiple.
Pipe was common.
Right. And then now there's nobody doing any hardly greenfield new pipeline systems. Most things are dedicated. And so there's a lot of guys that built careers around one playbook. That was it. They didn't really have to innovate. Didn't really have to think outside the box. It was like, this is how you make money. It's always going to be like this. And we're just going to continue to do that. Then they looked up and they couldn't make money doing that anymore. And a lot of those guys left the business. I mean, I know a ton of smart, really capable guys are no longer even in the industry anymore because they just couldn't.
It's
evolve.
like landmen. Landmen are the same way. Like the only ones I know that are still in the business, landmen, they're stone cold killers. And they've survived and kind of risen to the top. But shit, I don't know what 80% of landmen aren't in the business anymore or doing something else in the business. They're not landmen anymore because it went from leasing up all this acreage to, everything's kind of leased up now. So you have this massive fall off, and that's kind of one of my, like, I can do landman stuff, but like I would never want to be a landman full time because you got 500 guys chasing the same nickel, So I just assume hire a landman to do stuff. But Title, title and landmen are a vital part of oil and gas production, as you probably well know, to make sure you're not walking into a bear trap. But the ones that are still around are arguably the best there are and have survived. But it's like midstream; it just got gutted.
Yeah.
So you're constantly having to evolve into
Right.
it.
Right. No, land is a great example. That's one that I've seen too. I know really smart friends of mine that are in the land side and have moved on to different things. Now they're in the medical industry. They're in other industries because they just said, "Look, I've made money doing this, but right now there's not the money that I thought there used to be, and I can do something else." And they've had to pivot, and you've seen that. And maybe they'll get back in with things changing, but I think this ability to evolve and to gets back to dealing with that uncertainty and being in that mindfulness and
Yeah,
to just focusing on what you can control. And sometimes you realize there's things you can't control that are affecting your business model, and you gotta evolve. It's like the digital wildcatter guy saying evolve or die. I love that. It's just it's the reality is that's what it is. You got to evolve or die.
yeah.
And so I constantly trying to do that. And we just hit an hour here. By the way, I can't see your camera, but it's still recording. I don't know if you can see me, but don't worry if the connection's bad. We'll just keep going through it.
Yeah.
Okay, cool. Well, last thing here, I just want to talk about.
It says it is.
Yeah, it says here. I just can't see it because of the connection, but we'll keep recording. It'll upload.
Cool.
The last thing here is talking more about the Twitter stuff. It's crazy, man. I mean, when did you really start getting into? I mean, you said you've been on it for a while, but like, just your thoughts about kind of this EFT or energy Twitter, and when did you really start to kind of immerse yourself in it? And just, it's a wild space. I think there's a lot of positives. I've also seen a lot of negatives from it. My mindset around it has changed. I've been trying to be more thoughtful and curating what I actually want to focus on and what I want to give my energy and attention to. And but just your thoughts on the energy social media stuff.
I think it's been really good for me. I've made more contacts on Twitter than I have LinkedIn.
Yeah.
And outside of the shit talkers and the anonymous accounts that talk shit as if you don't know who they are, then you bring up who
Right.
they are, and they're like, "Oh shit, I guess I better stop talking shit." It's been pretty good. I think EFT is going through an evolution itself, where it's like, somebody makes a comment about landmen, and it's like, okay, maybe that one a good one, and then somebody makes a comment about geologists, and then it's just constantly shit talking, and some people take offense easier than others, and then there's always going to be shit, and there's always going to be people that don't like other people, but I think in general, I think there's a lot of really good information on EFT when threads start and discussions start. Koss from Diamondback was talking yesterday about supply restraints, and that's a Twitter energy discussion. And I mean, this dude runs Diamondback, and he's on Twitter talking about supply constraints, and it's like, wow, shit, I'm surprised anybody's actually talking about that.
Right.
So I think it's a lot more beneficial than it is harmful. Like Twitter energy is like nuclear. It's a lot more beneficial, but everybody just sees the bad stuff.
Right.
So I think it's come a long way, and then people just being people.
It's a cool community. I think it's
shit.
good. I think it's a good community. I think sometimes the shit talking can be fun. I think other times it's just silly. And I tend to like and gravitate towards people that use their real name because I know who I'm talking to. And I feel like there's a level of honesty there that they have to be honest. It's like, they don't have to be honest, but it helps.
You have to own your shit talking.
Right. And I've enjoyed it. It's been a positive. I think I should have been on it way earlier, and I'm going to continue to do it because I meet people like you and have great conversations, and I'm glad we did this because it's really interesting, and I want to do more content whenever you can come back at some point and talk about things that are less confidential whenever you move on to your next quest or get your next thing that you're working on. I'd be happy to have you on, but yeah, go ahead.
I'm a free man come July, so I'll start having some fun again out in the field and making videos, and Allie will be handling a lot of the research side, so I can just get in the lease hog and run out and do deals and video everything. And we've got a lot of big stuff coming with Oil Mutt. We just did a deal with a retailer, so Oil Mutt clothing is coming out, which is awesome.
Nice.
Maybe doing a software deal, kind of a training with software, so to speak. It'd be free to people, but show them how to use software, all kinds of stuff. So a lot of big stuff coming for Oil Mutt.
Where can people find your stuff right now, or do you have anywhere? Where's the best place for people to contact you, follow you, or find the Oil Mutt stuff?
At Oil Mutt is everywhere: Facebook, YouTube, Twitter. YouTube is mainly where I post videos, and then I do a little bit of Twitter. My personal Twitter gets a little political, gets a little sportsy, gets a little asshole-ish, but Oil Mutt stays out of all that bullshit outside of price. If it's political and policy, then it goes on Oil Mutt, but that's it. So
yeah.
If a pipeline gets shut down, well, then Oil Mutt covers it. But outside of that, I typically don't call, Biden an asshole or Trump an asshole or whatever on Oil Mutt. On my personal, I get a little more colorful. So
yeah. Cool. Well, I would
pick your poison.
Yeah, I would encourage everybody to check out both. You're a great follow, and you're doing cool things. And Josh, I appreciate you coming on, man.
All right. Thanks for having me, man. Anytime.
All right. Talk soon.